Welcome to the Live Life Rich podcast with Marissa Nielsen, where we educate, empower, and equip you with real-life strategies to navigate the core 4 areas of your life: emotional, relational, spiritual, and financial. In this podcast, we don't just survive, we thrive. Now, here's Marissa.
Hello, and welcome back to Live Life Rich. I am Marissa Nielsen, your host on today's podcast of Live Life Rich. And if this is the first time of you visiting my house, welcome to my house. I'm so glad you're here. And if you are back as a repeat offender, back in my house, you are not a repeat offender because you are invited back every single time. Be my guest. I was recently at Disney World and I went to the Be Our Guest restaurant, and wow, what an experience. Disney does it right. They know how to treat a guest. And you are a guest in my home. I hope you will not only be a guest in my home, but I hope you will be my friend. I hope that I can add value to you and that at the end of the day, you say, man, I am better because I listened to that today and I got one idea. I just got one idea today that's going to help me grow forward and live life rich. On this podcast, our aim, our goal, our daily desire for you is that you live life rich in all areas of your life, emotionally, relationally, spiritually, physically, financially, in all areas, that you master those. And so today we're going to talk about money. And I'm going to give you some rules that you do not want to break. These are rules that if you break these rules, you will stay broke. Even if you made some money up until now, if you break these rules, you will become broke again. I've seen it happen over and over and over again over my 30 years of being a money and mindset coach. I want to add value to you today and just let you know that you don't have to live that life. I share with people every single day, I get to live life rich, and I get to live this life that happened for me, not to me. So perspective is going to be some of the things I'm going to talk very quickly about today, and then I'm going to get you some practical things as well that you can apply to your life, your business, your money, and really helping you master this area and live life rich. I'd heard a statement one time that I make myself rich by making my wants few. Well, I think that's interesting. What we want and what we need. I'm just really grateful for the little things. The older I get, when I was in my 20s and my 30s, I was out to slay the world. I picked up my sword and I'm like, I'm going to slay it out in business. I'm going to be the best. I'm going to be on the stage. I'm going to get the awards. I'm going to do that. And I worked my butt off. Doing it. I have an episode that's going to be coming up that you want your kids to listen to. People that are in their 20s and 30s today, late teens, 20s, 30s. You want to listen to this episode because what you slay in your 20s and 30s and 40s is what you will eat in your 50s, 60s, and 70s. And so I've got some real success tips that I've been coaching many families for years and years, and I know that they work. And I want to help you and your family. I want this to be a family thing. I was listening to Warren Buffett just recently, and he said, spend your time wisely. You only have a limited amount. And I thought to myself, you know what? Not that I want to, contradict the great Warren Buffett, because he is the man, right? Like, he's done really, really well, and he is a disciplined investor. But I thought it was interesting that he said, spend your time wisely. It's interesting because my quote for you today would be, invest your time wisely. You only have a limited amount. And here's what I've noticed in this millionaire mindset world is that if you have a millionaire mindset, broke people and rich people have the same amount of this thing, and it's time. And I talk about it on my Facebook page. I did a series on this recently, the Millionaire Mindset, on my Facebook page. Just did some short videos with some practical application that you can ask yourself some questions. But I'm going to ask you, what are you investing in today? Because I'm going to talk about money, and I'm going to give you some real practical steps on rules you do not want to break when it comes to your money. So the first one is, I want to just share with you, these are financial rules. These are money rules that you should never break. And as we're going through here, take a deep breath, because if you've broken this a time or two and you still woke up above ground, you still get to do something different tomorrow. Whoop, whoop. You still get to make a change. You listen to this podcast today, and now there's an opportunity for you to do something different tomorrow. So even if you're not where you want to be, let me encourage you today. You are listening to this podcast for a reason. You are here on purpose. And I want to help you live life rich. I want to help you use these strategies and these proven, time-tested strategies that I know will work because they've worked for me, they've worked for thousands of my clients, and they have worked for hundreds of thousands of people around the world. There are many of us in the industry that have seen this. So let me get you the first one in these money mistakes and money rules you don't want to break. The first one is the best time to invest is now. We are coming off of and coming on to in the midst of this great financial opportunities. And we're seeing, COVID hit last year and it was a huge financial crisis, but many, many companies did really, really well. In fact, I will tell you in 2021, if you were a mechanic in 2020 or 2021, a mechanic in that year, you had the number one best well-paid job in the nation. Like, what? Really? There's evidence based on this. Number one best job. And people go, a mechanic? Really? Yeah, because they have a useful need. People need to get to the grocery store. People need to get from here to there. And people are going to pay you to do that. So I would just share with you, how you look at things, your perspective is so important. And there is opportunity even in the midst of great depression. There is opportunity even in the midst of great oppression. There is opportunity even in the midst of financial crisis. So what your perspective is am I looking at all the junk or am I looking for the gold nuggets? And I share with you today that your perspective is going to be really important in this rule number one. Rule number one is the best time to invest is right now. Do not wait. Don't wait. If you have to say it to yourself 50 times every single morning when you get up in the morning, practical strategy number one, do it now, do it now, do it now, do it now, do it now. Just say it to yourself over and over and over and over again. Because people put things off, and procrastination is the killer of your profit in your business, of your bank accounts, of your investments today, in your life, in your relationships. Procrastination is the killer in all good relationships. You say, well, I'll tell them how much I love them tomorrow. And then somebody prematurely passes away. Or you say, you know what, I'll bring my spouse that cup of coffee and smile at them and tell them I love them today. And little bit by little bit, we stop bringing the coffees. And little bit by little bit, we stop sharing that smile. And little bit by little bit, that relationship dies. So these rules, when I talk about the best time to invest is now, I'm not just talking about money. This applies in all areas of your life. The best time to invest is right now in you, in your personal growth and development, to build a personal growth and development plan, to build a business plan. The best time to invest that time is right now. The best time to invest in your health is today, to take a walk. Even if you can only walk 20 steps because you are 300 pounds overweight, maybe all you can do is do arm lifts from your couch. If that's all you can do today, you can do 10 today and you can do 12 tomorrow and you can do 15 the next day, because small actions over time lead to great change. So the number one thing I would just share with you is the best time to invest is now. Do it now. Create a strategy in your head that's going to help you do that. The third one is never let your emotions play a role. So when you're investing today, and I'm going to talk a little bit about the stock market when it comes to this, people get really freaked out when they see like the S&P 500 or the Dow go up or down, or they see this negative news on TV. I don't. I look for the opportunities in that. As an investor, I look at how I've designed my portfolio for short-term, intermediate, and long-term money. And now I'm not giving you any individual stock advice here today. I'm not giving you any individual financial advice. Of course, if you need that, I can hook you up and get you the help you need in those areas. So if you need that, just email me at admin@marissanielsen.com and I'll help you get a second opinion on where you're at. But I would share with you that you really want to be careful in this area, is that we never let our emotions play a role in this. And sometimes we're listening to people at the coffee shop, around the table, at our local barbecue. We're listening to them in groups when we get together and we gather and we have fun with our friends. If you're taking advice from broken, happy people, stop taking advice from broken, happy people. I know it sounds really simple. You're like, duh, Marissa, thank you for your great wisdom. But man, this is simple stuff, guys. And I can help you walk down that road, but I can only be with you for this 30 minutes a week. And so who you surround yourself with and what you surround yourself with matters. So never let your emotions play a role. When you set your disciplines for investing, I have disciplines for investing. It's one of the things when I mentor people in their businesses and in their plan today is I ask, okay, what are going to be your daily disciplines? What are you going to do daily? And what are going to be your investment disciplines? Why are you doing it? How come you must do it? What's the purpose behind it? And I ask all these sets of questions so that when your emotions get high, when things get kind of crazy or hairy in your business, or when the contracts fall through or the contracts don't go through for whatever reason, or somebody backs out or bails out, you go, okay, what am I doing? What am I falling back on? So emotions can be the killer of all your profit in your business because we make dumb decisions when fear drives our behavior. And I've learned this lesson. I've done this. I've done dumb stuff in my business. I've made dumb mistakes financially. And I want to see that happen to you. So number 2 is never let your emotions play a role. Number 3 is stop trying to get rich quick. Oh, stop attempting to get rich quick. Stop taking advice from every Tom, Dick, and Harry. My mom used to say that. Stop taking advice from every Tom, Dick, and Harry that don't know anyway. This is where get rich quick. There, you might be that laser flash in a pan that does it. But what I've found is the wealthiest of the wealthy I work with, they had one thing in common, and it was their habits, and it was being consistent in making good decisions, good and bad decisions, but it was consistency that kept them where they were at. And when I say kept them where they're at, kept them growing on that growth trajectory to become rich, as opposed to going backwards. See, where I see these get rich quick things is people think I'm going to, open this business. I'm going to make $1 million a year. I'm going to live on my boat and I'm going to take these fancy vacations and I'm going to drive a Denali or whatever their Ferrari or whatever it is that they want to do. And at the end of the day, they look back and they move from one thing to the next thing to the next thing. And they don't give it enough time for that investment to actually get moving. And when you don't give the investment enough time, it's much like a seed. I was a farm kid from, Max, North Dakota. God bless the families of Max, North Dakota. And I grew up on the farm, and I learned that when a farmer plants a seed in the spring, it takes time for that seed underground. I mean, we didn't see that seed for months sometimes pop up, definitely several weeks. And if we had the right rain and we had the right conditions, it would come sooner. If we had not the right conditions, it would come later. But it came. It eventually came. And that seed would pop up through the ground. We'd see this little green spoke of something that was growing. And then we'd see that thing grow all summer long. And then we'd get to harvest it. But it took time. So stop trying to get rich quick, because those get rich quick schemes, there's some guy at the top that's making a crap ton of money off of your hopes and dreams. And most of the time, it's not working out so good for you. So if you stick to the habits of product and service and you say, what am I doing to add value to the marketplace? What problem do I solve? And at what value? And I want to share with you a quick quote about value, because Warren Buffett said this probably best of any of the people that I've ever heard it said. Price is what you pay, and value is what you get. So there's a price to be paid for everything, right? There's a price to be paid for everything. So price is what you pay, value is what you get. But anytime you start do these get rich quick schemes, that's typically what they end up doing is keeping you broke. This will make you a broke, unhappy person. The next one I've got for you today is to never chase the trend. You want to predict it. You want to look forward. You want to get around a group of thinking partners that will help you ask the question, what's next and what do we see coming? What are the conditions and circumstances that we see around our product, our service, our industry, or whatever we're doing? And we want to predict those things. We don't want to chase the trends. I love this when people say, I read this magazine and it said the top 10 best places or top 10 best stocks or top 10 best ETFs or top 10 this from last year. Those are the ones I want to buy. And then you see that stock mutual fund, ETF, whatever it is these people are buying, take an absolute dump that year. This is foundational. You don't buy what's on the top. You don't buy high and sell low, guys. But people do this all the time when they're investing, is they buy low, sell high is what we should do. But what they end up doing is buying high because they read it in a magazine that last year this was the best of the best. And now they end up selling low. They buy high and sell low. That's the exact opposite of what we should do. So never chase the trend. You want to predict it. You want to get around thinking partners that help you build a portfolio of things that predict trends, where you look around and you say, what do people want? What do they need? Where do we see industries and legislation and all these conditions and circumstances and factors, and get that research. So that's the next one I'm going to give you, is do your research before investing. Ask good questions. I've got a navigating series coming out to you. It's a GPS series. It's a guided planning series for these core areas of your financial life: tax, legal, insurance, investing, all these different areas. And in those areas of navigating those areas, that's coming soon, by the way. You're gonna see some of that coming out in July, August, and September of 2021. And as you look at this 2021 timeframe, I was like, now is the time. People need to be able to navigate this, and they need to know what questions to ask their accountant, what questions to ask their attorney, what questions to ask their financial advisor, what questions to ask their insurance people, what questions to ask their HR, mortgage broker, mentors today. Because questions lead to either more questions to get clarification or the answers that you're looking for. So you got to do your research, and you got to know what questions you need to even ask before you begin investing. Like, how much will this cost me? What kind of expected return? What kind of time frame am I looking at? There's a lot of questions that go into that. And then how do you get paid? What are the different ways that people get paid in the industries? Whether it's a mortgage broker. I literally was just working with someone on a mortgage the other day. They're investing in real estate property, and it was a foreign national. So it's a friend of mine that I met through the John Maxwell team, and I was helping this person purchase property. And I got on the phone with the mortgage broker and this person because their English is great, but they, not necessarily familiar with the rules of the United States. And so they bought this property, or were about to buy this property, and I asked these closing cost questions, and the mortgage broker said, well, it's 6%. And I was like, ooh, that's a little steep, isn't it? And the mortgage broker said, oh, no, that's right on point. And so I looked at interest rates and some of these things, and I said, man, we need to negotiate this. So we got off the phone. I got with my friend, and I said, hey, these are the questions we need to be asking differently, because this is steep. This is about 3% higher than what you should be paying. And when you're talking about 3% on, a $600,000 property, 3% more is 18 grand, baby. I don't know how long it takes you to make 18 grand, but 18 grand ain't no chump change to me. I'm looking at that 18 grand and I'm thinking, okay, time value of money, that's wasted opportunities if I don't get the best price, right? And so it's about negotiating that. And part of that is that you do your research before you invest so that you can ask the right questions and protect yourself. The next one I've got for you is keep track of your balance sheet. This is huge. People don't keep track of their balance sheet today. Are you growing forward last year to this year, this 6 months to next? How much money did you put in? How much ROI did you actually get? Return on your investment did you actually get? So if you started with 100,000 5 years ago and it's still only at 102,000 5 years later, there's something wrong, because even at a 5% rate of return, 5%, the second year, it should have been worth 105. The third year, a little over 110. The fourth year, a little over 116. The fifth year, you with me on this? It should be more. It should be growing. It should be going in the trajectory of where you want it to go, which is up. And part of keeping your balance sheet and really looking at that math, my kid giggles at me. I've got actually 21-year-old daughter now. She's just turned 21. And I look at my money every single day. I look at my Fidelity accounts. I look at my balance. It takes me about 10 minutes to go through all of my accounts in all of the locations. And I have everything set up on my iPad in a secured section. And I look at it and I say, oh, we're up or down today. And where are we at? And this is my safe money. This is my intermediate money. And this is my long-term money. Every single day I look at it, and every single day I have a balance sheet that's attached to the bottom of this little spreadsheet that I have that I can see, okay, if I plugged and play those numbers, here's what my real estate is worth. Here's what my business is worth. Here's what my family home is worth. This is what my personal assets are worth. Your balance sheet is really important. It's not just the investments we should look at, is we really need to see, are we moving forward in the direction of where we want to be? What's my real number that I feel good and safe and I can sleep at night with? That's a big, big deal. So again, to follow up, that's number 6 on our set. Our number 6, if you're keeping track, it's keep track of your balance sheet. Number 7, never borrow money to invest. Oh, loan sharks, baby. Loan sharks. Back in the day, you can't even do this anymore, I guess. There are some ways that you can do this in the financial services world if you want to put some things up as collateral and all that. But I am very leery of borrowing money to invest, because an investment for me is about helping that money grow forward into something. And so when I say invest, never borrow money to invest, sometimes you'll borrow money as seed money for your business. And that to me makes sense, but you should have a business plan that goes with how long and how much will that take me to pay that money back? Because there's a cost. There's a cost to borrowing money. There's a cost. It's interest cost. And I think, man, I've had some really tough conversations with clients over the years where I've said, hey, you haven't thought this thing through, and we need to think it through before you go put some cash into this thing. We need to be taking what is chaos and turning that into order. There needs to be an SOP. There needs to be a standard operating procedure. There needs to be some processes in place to make sure that this money comes back to you. And I'm all for investing. I am all for doing that. But I want to know money in versus money out. What's my ROI? And you're borrowing money to invest in that. For example, I own real estate. Now my real estate is leveraged today, which means I've borrowed money against that real estate. But that real estate is producing income for me. And I know what those rental contracts say. So even though that interest rate is still there, I'm still making more money on the rental income than I am after all my expenses, taxes, maintenance, insurance, and interest that I'm paying on that property. So when I say never borrow money to invest, I'm talking about things that have not been thought through from a risk standpoint, where I got this hot stock tip and you can't lose, right? You probably can lose. So let's really think that thing through before you put your hard-earned dollars into something that you end up having to pay back. And now I'm going to go with number 8. Number 8 is I want you to never forget the rule of 1 to 7, or the rule of 72. You've heard me talk about this before. It's the time value of money rule. It's the investing rule. These rules can add value to you and keep you broke, or they can add pain to you or add value to you and keep you rich, or add value to you and keep you, or add pain to you and keep you broke. And when I talk about this painful rule, not understanding the rule of 72, I see a lot of seniors, a lot of folks that are retired today. They're 65 plus years old. They're going to live till they're 95. They got to make that money last 30 years. And then they go see some advice person, and I say that with sarcasm in my voice, and you're like, oh, she's getting a little snotty. Yeah, I am. And they tell people like my mom, who's 75, you know what, you should just put all that money in a CD and earn 1%. And I'm like, Mom, the rate of inflation is long term 2.5%, 3%. You got to make at least 2.5%, 3% just for that money to break even, just to keep the principal power of that purchase, right? And my mom's like, well, I don't want to lose it because it'd be you look at how that stock market goes up and down. And there are different risk levels. So if you're working with a good financial advisor, they're going to talk about the different levels of risk. They're going to talk about short-term money, intermediate and long-term money. But, my grandma lived well into her 90s. If my mom lives another 10 years, 20 years, which please God, that would be awesome, because I love your caramel rolls, Mom. Well done, Mom. My mom makes the best caramel rolls ever. So if you need caramel rolls, call Connie Filipenko. She does a great job, although you have to step in line behind me. Anyway, rule of 72 for my mom. If my mom wanted to put money away and is saying, hey, I need that money to live off of in retirement. Think about your moms. Think about your grandmas today. They cannot live at 1%. Even in retirement, some of their money needs to be making money for them. And so this rule of 72, let me explain it to you really quickly. You take the number and you divide it. You take 72 and you divide it by the interest rate or the return that you're receiving on that investment. So rule of 72, really quick. If I make 7% on my money, hypothetically, and I divide that into 72 every 10.29 years, my money's going to double. It's called the rule of 72. Teach it to your kids, teach it to your family. Use this rule. Make it a benchmark when you're working with your financial advisors. Say, my longer term money needs to be doing this because every 10 years I can predict what your money value is going to be, right? So every 10 years we can predict this because if you put in $100,000 today, you earn 7% on that. In 10 years, if you are 40 years old today, by the time you're 50, in 10 years, that $100,000 will be worth $200,000. And if you kept it invested in that 7% average rate of return, right, for another 10 years, my $200,000 by the time I was 60 would be worth $400,000. And by the time I was 70, it would be worth $800,000. And by the time I was 80, it would be worth $1.6 million. This is math. It's called compound interest. Never forget this rule. The rule of 72. Google this sucker. Get it in my downloads. Get it in my classes. Get it in this podcast. But the rule of 72 is super powerful. And this is a rule you cannot afford to not know. It's a rule you cannot afford to not teach your children. And every time you're making a financial decision about where to invest, you want to ask this risk versus reward rule of 72 investment rule. So if I'm going to be lower risk, lower reward, right? Maybe I'm going to make 5% on that money. Then I'm going to take 5% and I'm going to divide, 72, divide it by 5%. And that's going to be how long it takes that money to double. And so thinking into that for you, for your family, just really, really practical. Teach this rule to your kids. Teach it to somebody in your company. Teach it to the youngin' that just got their first job. Show them what $250 a month can do long term. For a 25-year-old that starts at my companies, I own a couple of different companies. If you're 25 years old, and you'll know this because I've had some 25-year-olds there that go, oh, yeah, she does this actually. We've got a retirement plan at work and we do matching. And in this matching, I say, if you put in this much, we're going to put in this much. So if you do $125 a month, we're going to do $125 a month. That's $250 a month that you can have going back at age 25. If you make a 12% long-term, go really high risk when you're young, right? You say, I'm going to go for the gusto and let's pray for the best, right? And let's make really good critical long-term decisions. But if that person made 12% on their money, that thing would be worth a little over $2.9 million by the time that 25-year-old hits 65. They've only put in $120,000 over their lifetime, and it's worth $2,900,000 and some change. These rules, these math rules of being consistent, making these great decisions. I've given you 8 great decisions that you can make with your money today. Don't look back. Make sure that you're making that money work for you. Life is 10% what happens and 90% how you react to it. And I would share with you, set these disciplines right now in advance. Set these disciplines in your investing, because as you think forward into your business, into your financial future, Warren Buffett said it right when he said, when we talk about value, price is what you pay and value is what you get. So you want to get value out of this time. You want to invest your time wisely. You want to invest your money wisely. You want to invest in your relationships wisely. You want to be able to sleep at night knowing I have done all I can with the resources I have and I have become the very best steward I can. It's why I'm doing this podcast with you every single week. I believe in you. I hear from you. I heard from a listener recently and she said to me, you know what? I have this dream. I have this dream for this studio and I want it so bad, and I know that it can work, and I need a plan. And the space between your hopes and your dreams fulfilled is your plan. And I know it's why you're here working with me every single week, listening every single week, getting my downloads, taking the art of the introduction that I just came off of that 2-part series for you, taking that mini course, investing in you and your personal growth and your time, investing in your growth is everything, because it multiplies. It's not just the law of addition, it is the law of multiplication. And that's what math does. That's what math does. That's what money does. That's what living life rich does for you. It multiplies. In your relationships multiply, and your abundance multiplies. So I'm really excited for you. I'm excited for where you're at on the journey right now with us today. I want to just share with you my ask for you today. If you liked this podcast, if I said something that made sense to you and you said, oh yeah, that was good, can you like this podcast? Would you do me a favor and, go to wherever you listen and give me a 5-star rating or review? Write me a little note. Let me know where you're at. I'd love to know where you're listening from. If you could send me a Facebook message and just let me know, hey, this is me. I listen to Live Life Rich and I live here and this is what I do for a living, or whatever you want to say. I want to hear from you. I love to be with people and I love to add value to people. So thank you for the time that you spent with me today. Thank you for the time that you invested with me today. And I'm really excited for the next upcoming podcast that we have. You do not want to miss it. It's going to be really a 2-part series on this Think and Grow Rich, and some different areas that I would talk about in abundance and some practical strategies on how to live that out in your life, things that I've used and applied over the last almost 30 years of business. So really, really pumped for this. We're going to have a great, great time. Can't wait to see you next week or hear from you next week. Please reach out, give me a 5-star rating review, get these downloads, share it with people that you love. Help me spread the word. Would you do that? Would you help me spread the word? I want to help people live life rich. I want to help you live life rich, your family, your friends, your children. I want there to be abundance in your life. And I pray for you. I speak that over you and your business and my friends, my listeners, every single week that are listening to this. So thanks for being with me on the journey. If there's anything that you want to hear more about, please reach out and let me know that too. Love to get your emails. It's so fun. I keep every one of them and I respond back, by the way, personally to those emails. So thanks for doing that. Appreciate you. We'll see you next time. And until next time, I hope you live life rich.